Oh, good evening.
Good evening. Philip.
Good evening, Engineer Inshra. Show your face. Let your classmates see your face. And after that, we'll start the lecture right away.
Okay, minutes.
Reggie, since you've not met Engineer Inshra before, I think you show your face. And for the benefit of those of you who just joined, Dr. Nanakwesio Say is on the line. We've been having a nice conversation with him and George for the past 15 minutes whilst we're waiting for you guys to join. And like I said, subsequent lectures, like tomorrow, there's a lecture tomorrow. I'm not going to call anybody. When it's exactly 5, I'll start. Because I think this thing, we are all adults, guys. We are all adults. We all know that we are all busy people. Let's agree to meet on time and close early from the class. There's no point in me coming in. Now I'm calling this, I'm calling that. It's not nice. Guys, I know you are busy. You may have genuine reasons why you are late. But let's try and clean our houses in such a way that we can be here on time. Okay. Thank you. Okay, now everybody show your face so that you can know each other. Then we start. Guys, you should not take another 1 minute to I bet just show our face and go home. It looks like you guys are shy. You don't want to show your face. Okay, I'm starting the lecture.
Oh, I'm not sure. I'm coming.
But we are already 20 minutes behind schedule. So showing our faces should not take this long, guys. By introducing yourself to the class, you can take the camera off. That's fine.
I do not allow permission. I'm coming.
Hey.
So, Engineer Inshira, you are the one that they've not met. So maybe right now, I think Reggie is showing his face. Philip, if you can put in your camera, yes. So class prefect, over to you. Introduce yourselves. Then I'll take it from there.
Okay. I think for Reggie and Philip, we don't need introduction, but engineer, I'm George. I'm the appointed. Appointed class rep. So nice to meet you here.
Nice to meet you.
Now, engineer, anyway.
But person may allow.
All right.
George, I'm sure you're in negative now.
Is that? Oh yeah, it's even went for the stop loss. I just checked. They cleared the stop loss.
God is in those moods, but it's good. Inshira, let the people see your face and let's start, okay, guys?
Yeah.
We are behind schedule.
Coffee. Coffee light, no. No. The light back on. And AC. Okay. Changing. I'm Inshira.
Oh, nice meeting you.
All right. Nice meeting you, Inshira.
Nice to meet you.
I am Philip.
Okay, Philip.
Philip, yeah. Philip from Tema, Ghana.
Oh, that's nice.
And I'm Reginald, Accra.
I'm in Kumasi currently,
Oh, okay.
but I work in the Volta region. So I'm mostly in
Okay.
the Volta region.
Okay.
So from
That's
tomorrow,
fine.
I won't be in this
In
free
Kumasi
market.
anymore.
Yeah, I won't be in Kumasi.
Pastor, you see the way
No.
your man make fine boy. Okay, let me start the lecture.
Okay.
All right, guys. Today we're going to talk about market structure. If you remember, I gave you guys glimpses of it. So you're welcome to another day, another time to talk about forex. Okay. We are privileged to be joined on the call today by my co-mentor, Dr. Nana Kwisio Sefo. As I told you guys on the first day, he's an obstetrician gynecologist. He's been training for some time. In fact, he actually even got me interested into forex. So if you like, you can say maybe probably he instigated me or gave me the kick at the right side to get into forex. So all that I do in forex right now, I owe it to him. But without him, maybe I wouldn't have been in forex. So as you can see, I chose this image because we are talking about market structure. So we are in the market. And when you go to any traditional market, be it in the Western world or in an African setting, there are structures in the market. Okay, you enter through a gate, you exit through a gate. So that's more like your TP and your stop loss. Then, if you want to enter a particular shop, there are certain steps you must take to get to a particular shop and all that. So basically, we are going to talk about market structure today. And I hope I can do justice to the topic in a reasonable time frame so that we can go to the charts and see whether we can identify any of the things that we've spoken about. Okay. So let me start by saying that we are going to explore market structure, which is the backbone of price movement. And why do we need to understand market structure? Because when you understand a structure, it helps you to appreciate trends and anticipate potential or possible reversals. Then also to align your trade bias in line with institutional traders or institutional flows. And this is where, for the way I trade smart money and other chart patterns. So in all, I trade a pattern called mechanized trading system. That is how I trade. But we'll get there someday. So what are the learning objectives? By the end of this session, you should be able to understand how price move in waves. You have to be able to identify bullish and bearish structures, spot break of structure, change of character. Use your structure to guide a directional bias where you should enter a trade potentially or where you can exit a trade. So what is market structure? Market structure refers to the way price moves in swings or in waves, forming highs and lows. These swings define the trend direction. So the key components may include higher high, higher low, lower high, lower low. Recognizing these patterns help you to understand whether the market is moving in a particular direction or is directionless, as in it is going up, down in what we call consolidation or ranging markets. So as you can see on this image here, and like we do in most of our previous lectures, we don't spend too much time on the slides. We use the slides to give you a theoretical knowledge base, then we go to the charts. So today's lecture is still following that sequence. So as you can see, this is a downtrend. It's a downtrend because as you can see, there's a high and there's a low. Now we have series of lower lows and lower highs. So you can see that each successive point here is lower than the previous. It's lower than the previous. So if you come here, this point here where the laser pointer is lower than this point, is lower than this point. So when you see a series of lower lows and lower highs, you say market is going downwards. I mean, visually, you can see that this is going down, but it is a structure of the market confirming that price is going down. Then this one is an uptrend, or price is going up. And as you can see, it's a series of what? Higher lows and higher highs. So as you can see, price started with a low, a high, came down and formed a higher low. Meaning that this low here is higher than the low. That's why it's a higher low. And like I said in previous lectures, higher lows confirmation is what determines directional change. It gives it more credibility that the direction is changing from probably maybe it was initially a downtrend. So once you see a higher low, a point on the chart created which is higher than the previous low, that means market the trend is about to change. So you can see then you went up. This point here is higher than this point here. So that is a higher high. So the series repeats itself. So you have a series of higher highs, higher lows. That is an uptrend. So I want you to keep this in mind. So then the logic is that you have to stay aligned with the trend and avoid counter trade or counter trending trades setups. So if the price is going downwards, then you have to position yourself to look for a sell. When you become experienced, you can engage in counter trade, but at the moment, I will not encourage that. Just stick to the simple one. And the most money that is made when you are trading what we call pro trend. You are trading with the trend, not against the trend. Because someone will ask you, but if price is here and you know it will come down, why can't you sell? Yes, you can sell. But if you are a beginner, we don't advise that. We advise that you rather wait for the higher low to be created than buy to the point. And when you are buying, we say you should target the last higher high. That should be your minimum target. Your minimum target should be that point. Anytime you are buying on an uptrend, you target so where it's going to lead to a break of structure. We'll get to break of structure very soon. I know I mentioned it in the previous lectures, but let's go. So what is break of structure? A break of structure occurs when price breaks a previous swing high or low in the direction of the trend. So for example, in an uptrend, break of structure will happen when a new higher high is formed. So if I go back to the previous slides, follow the laser pointer, as this goes all the way up, it broke the higher high structure and formed a new higher high. That's exactly what I just said right now. So in an uptrend, a break of structure happens or is said to have occurred when a new higher high is formed. The price has gone above the previous higher high. Same way in a downtrend, a break of structure is said to have occurred when a new lower low is formed. So a break of structure confirms that the trend is continuing. It's more of a validation signal that the trend has not come to an end yet. So if you are trading and price keeps forming higher highs for an uptrend, higher highs, higher lows, and it keeps breaking trends, creating new higher highs, then it means your uptrend is still ongoing and you have no reason to close your trade. So what is change of character? A change of character, I've always told people that change of character is basically, it's like your character has changed. So a price that was initially going downwards, I'll demonstrate on the chart very soon, like the real chart. We are done with the lecture. And anything that I say here that you want me to demonstrate further, note it down when we get to the charts, let me know. So a change of character. So price is probably going down, 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 down. forming a series of what? Lower highs and lower lows. Then all of a sudden, price moves up, going higher than the last lower high. Once price has gone above the last lower high, that is a higher high. So it means price has changed character from a downtrend to an uptrend. So we say this to be exact, that a change of character actually gives an early signal that price is about to change direction. It is itself not a change of direction, but it gives an intent. So it's giving you an indication that the market is likely to change direction. That is what a change of character is. So you realize that when I label my charts for your sake, when price is going up and all of a sudden it comes down and it breaks the last higher low, that is a break. That is a change of character. So keep that in mind, okay? Now let's talk about internal and external structures. So structures in the market structure exists in multiple levels. We have external structure, which refers to the swing points on higher time frame. And that is where you set your bias. So if when we go on a higher time frame, I'll demonstrate 4-hour, daily, the external structure, or if you like, the swing points on daily and 4-hour. That is where you set your bias, whether it's an uptrend, downtrend, and what have you. Internal structures refer to smaller swings within a leg, and that's where we normally use to help you refine your entries. So you use external structure for direction and internal structure for precision entries or exits. So let me say this. You can say that anything 1 hour and above can be considered as external structure, though most of the time it refers to 4 hour and above. Or you can do an extension and extrapolate and say 1 hour may be involved. So anything below 1 hour all the way to like 15 minutes is internal structure. Then we also have fractal structure, which is when you're looking at your 5 minutes, 2 minutes, 1 minute. Those are fractal structures. So when you are marking break of structure or you are marking change of character, the chalk, on those smaller time frame, they are not as strong as when you see the same on external structure like 4 hour, 1 hour. So I want you to keep that in mind. So we say swing structure or external structure is stronger than internal, and internal too is stronger than fractal. So their usefulness will come soon when we start looking at the charts. So now let's talk about structure breaks and liquidity. So most of the time we say this, and I quote, that there is liquidity above and below each structural highs and lows of the market. So anytime price goes up and comes down, there's liquidity just at the top of the high. Price goes down and go up, there's liquidity behind or below that point lower. There's a liquidity there. So BOS may occur after price sweeps liquidity above a high or below a low. Change of character often follows a liquidity grab and signals a shift. So if you watch today, gold did something very interesting that led me to enter a sell, which if you get the opportunity, I'll demonstrate. And I use just these basic concepts that I know that when there's a change of character often follows a liquidity grab and signals a shift. So when you combine market structure with other concepts like other blocks, specific zones like supply and demand, and other confluence, including candlestick confirmations and all that, you can have high probability trades. But the baseline, the foundation upon which you are going to build all these concepts on is the market structure. Once you understand market structure, then you can add your point of interest on top. Your point of interest are what? Your demand zone, your supply zone, your other blocks, which we will do very soon. Not today, very soon. So you need to understand market structure very well. Once you understand it, building on top of it becomes easy. It's like building a house. Once you have a solid foundation, then going up is not that difficult once you have the resources or the things to work with. Yeah, let's talk about multi-time frame structure. Or if like top-down analysis, looking at structure. So always analyze structure across multiple time frames. Always. So higher time frames set the directional bias. So the higher time frame will tell you whether you are on an uptrend, you are bullish, or you're on a downtrend, you are bearish. Then lower time frame helps you to execute your trades, where you should enter your trades, where you should exit, and all that. Make sure that when you are doing this, your higher time frame and your lower time frames are aligned to avoid conflict. So let me give you an example. You go to 15 minutes and price is, let's say, is bearish on 15 minutes. But you go to 4 hours, it's bullish. You go to 1 hour, it's bullish. But 15 minutes is bearish. You have to wait for the price on 15 minutes to shift bullish before you try and look for a trade. So this all sounds simple, but at times we tend to overcomplicate our trades. I don't know why human beings will like complications like that. So to recap, looking at the takeaway messages and summary, market structure defines trend and your bias. Break of structure confirms continuation. Change of character may give you the first warning or sign or signal that there could be a potential reversal. Internal and external structures will help you refine your entries. And when you combine this with other concepts of trading like liquidity, order blocks, supply and demand, Japanese candlesticks, you can find high probability trades. So I'll bring the lecture to a close and tell you your assignment. You are to mark. So guys, take notes. I'm not going to paste the assignment in the class group. Take notes and write it down. You are going to mark 2 BOS and 2 change of character on live chats. Take a snapshot and share your answer on the WhatsApp platform before the next lecture, which is tomorrow, 5 p.m. Then you have to indicate your bias. Is it bullish? Is it bearish? As in, is it an uptrend? Is it a downtrend? And assuming you want to enter trade, you can just show up with a box or a highlight where you think you can enter a trade and where you can target, which I have said in this lecture. And share your answers with us on the platform before the start of lecture tomorrow, guys. Thank you very much. Let me pause for questions before we go to the live chats. The floor is open, guys. Talk to me before we go to the live chats. Oh, my people, you are too quiet too. Why?
I'm sure when we go on the chat and we come across any difficulty, we'll ask.
So at the moment, no question for me. Okay. Trying to see whether we can close exactly at 6. I don't want us to go beyond an hour. Our videos are becoming too long. Please, can you see my chat?
I think it's still loading.
Guys, can you see my chat?
No.
Yes, I can see it.
Okay, so who cannot see my chat?
I can't see it.
Hey, Master, check your internet too. You still cannot see my chart. Okay, let me stop and reshare. Because if you cannot see, then what I'll be trying to demonstrate, you may not appreciate.
I don't know if it's because I'm using the web browser instead of their app.
Okay. I don't even know what is going on. Seriously, I don't know what is going on. I don't know why you can't see the charts. So who was also not seeing?
I wasn't.
Oh, really? That's interesting. Philip, you were seeing the charts, right?
Yes, yes, I was. I was seeing the chat.
Thank you for your response. Oh, interesting.
No problem. So you try and reshare again. Let's see.
Yeah, that's what I'm trying to do right now.
Okay.
George, my PC has started that funny thing again, where as if it doesn't want to load fast.
Too many
Happening here again.
programs running in the background.
Today, I don't have a lot running. No. I did a scan, I didn't see any virus too, so I don't know what the problem is. And what you said, I put your PC off. George, what you said. Okay, now who can see my chart now?
Yes, I can see it
Yes.
now.
I can also see it now.
Okay, Reggie, you can see.
Yes, I can see. I can see.
Good. Okay, that's nice. So we are doing market structure. So as you can see, this is my chart. Okay, and I have marked structure. Let me go to a chart where there are not so many marked things, so that it doesn't appear like I'm confusing you. I still have too many things marked here. Okay, doesn't matter. That's my chart again. So let me go to daily, like the way we did it last time on the live chat, live trading, sorry. Honestly speaking, I'm getting pissed with the way this PC is becoming slow of late. Anytime we are doing chat showing, then it becomes so slow. It doesn't make sense. I think I've done this with you already. We went through this chat where I labeled them as double top and all that, if you remember.
Yeah.
Okay, to finish the work.
I don't know what is wrong with the PC. It's now behaving very funny. Hey, then hey. Interesting.
Ebia old age kakra achino.
Maybe I'll just buy when I'm buying a new laptop. I'll just buy a new laptop and a new phone at the same time. Don't worry,
That is all.
because this is annoying. But I was using this PC the whole day. It's been fine. What is all this nonsense?
Or maybe
Let me
it
just
doesn't
share it
like
again. I'm
Teams.
coming.
Some
I think the
sometimes just be
Microsoft
patient
Teams
with
too may
it
be
as
the
well.
problem, because, as I told you, I'm not a Teams person. All this is forcing me to learn Teams. I'm putting the trading view off and put it back on, because what it's doing, I don't understand what it's doing. So just give me a second, please. So, when I was going through the lecture, I said there are some things I will demonstrate on the live chat. So if there's something in particular you want me to demonstrate on the chat, please let me know once I load the trading view. So far, you understand break of structure. You understand, you can identify a downtrend. You can identify an uptrend. You can identify a break of structure, change of character. These are the things I want to find out whether you can identify them on the chart. If you say yes, I will let you share your chart and show me. That's the only way I can believe you that you understand it. Can you identify a downtrend? Let me hear from you guys. Yes or no?
Yes, 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 yes. I can. I'm sure I can identify a downtrend.
And I say that is yes for all of you guys.
Yeah, yes.
Okay. Can you
Yes.
identify a downtrend?
Yep.
Mm-hmm.
Can you identify a break of structure and a change of character?
I'll go over the change of structure and the the change of character. Go over it.
Okay, I should go over that one again. Okay, Mate.
Gracefully. Kofi Kwanotum.
Trading view is loading. I am Tokwa.
Change the hard disk in the Kosata.
Maybe I'm closing all other things which are not part of my presentation. Yeah, man, yeah, anything big deal, but I'm closing all of them. I want to make sure it's just the presentation and trading view. Everything else should go off. I'm doing that right away. Just a second. This is a shame because I was using this PC. There was no issue the whole day. I've done analysis. I've done it. Oh, Jesus Christ. This one, someone to say if in free fee be a computer name say we are.
Data transmission and intra.
Computer now or yeah. Let me put WhatsApp even off. WhatsApp too can be very annoying app. WhatsApp, desktop WhatsApp.
So go to tax manager. You know the app which is consuming your memory. For it to run slow, then you close that one.
Dan regime because there was nothing.
No, you go there. You go there first. You select the CPU. Then you click at the top. The one which is consuming more of your CPU will be up. Or you choose memory. The one which is consuming your memory will be up. Then you close that app, that application.
You know, PC name is a PC name wabre. This PC is old though. I bought this PC around COVID time. Wabre.
And yet old. 2019 up to now, and yet old.
Oh, wabre.
Format is yeah, beba. And yet old.
It wasn't a brand new PC. I bought it refurbished. The wabre.
I don't know.
The memory is on 90%. What is chopping the memory? Processes.
You did it.
The last time, registering got processes, the Baba processes. Okay. What is running like that? There's nothing chopping anything on processes too. Anyway, it's okay. Let me try and demonstrate quickly. When we are done with the lecture, I'll go and look at it. I don't want this thing to chop into the lecture time. Okay. Trading view 2 is taking forever to load. Okay. But guys, whilst the PC is loading, I beg, anything you don't understand, should I go over something again? I think Isra said the change of character. So what I meant, what I sought to portray was that if you have price which is going up, like an uptrend is going up, you label your uptrend higher high, higher lows. So you have a higher high. Then all of a sudden, price comes down, and if for price to continue going up, price should not come and take your higher low. Price should pull back, but it should not take your higher low. It should just pull back and continue going up to create another higher high. But for a change of character, price which is already going up, using the uptrend as an example, price will come down below the higher low. Then it will go up again. When that happens, when there is price going below the last higher low, that normally tend to go with liquidity grab, as I said in the lecture. So once you see that, you should know that gold is buying. So my brother who started buying gold can buy again. George, you can buy again.
Okay.
Anyway, let me try and share the empty trading view. And let me demonstrate practically what I was trying to say to engineer's question. Okay. I hope you can all see the charts, guys.
Yes.
Okay. Okay. You remember these charts? We went through these charts some time ago. So this is an uptrend. If you remember, I told you gold is overall uptrend. This is a daily time frame, overall uptrend. But for the time being, now gold has been coming down. So if you want to focus on gold now, you will focus on what is happening here now, not what has been happening from the bottom here. I said that last we went through it. I showed you reversible candlesticks patterns here. I showed you the double top and all that. We went through all that the last time in our previous lectures. Okay. So now today we are doing market structure. So if you watch, it's still labeled here. Still labeled here. So that is a high, that is a low. Then you have a what? A lower high. Then you have a lower low, lower low, lower high. Guys, can you see that?
Yes.
Yes.
Good. Let me go to maybe 4 hour to make it a bit more refined, kakra. Okay. So let me start from here. So we're going on an uptrend. And when we're going on the uptrend, let's start by labeling the uptrend. Let's label the uptrend. So this is a low for the uptrend. This is a low. Here, this is a low. And let's say this is a high. The uptrend is a bit funny because it went up a bit in a straight line. That is what gold does at times. So let's say here is a high, or somebody can even say here is a high. You can ignore all these nyama things here and say the high is here. So let's say high is here. Then if that is high, then this will be a higher low. Nothing must be perfect, but it must be close to it. So we can say here is a higher low. So if here is a higher low, we don't expect that price should, for the uptrend to continue, what it means is that if price comes down here, it must not break this higher low. It must come close and continue going up for us to say the uptrend is still continuing, breaking this high and creating a new higher high. But price came all the way down. So this is an example of a change of character. So this is an example of a change of character. The first sign that price is about to go down. So that's on this time frame. Okay, that's on this time frame. Okay. So now let's go to a much lower time frame. This is a live chart on gold. I want to demonstrate the chalk, that change of character that Engineer Shah asks about. So let me go to a much lower time frame where the structures are easily identifiable and it's nicer. Good. So this is good enough. So let me go back even to a much smaller 15 minutes. Okay, good. So let me label these charts right now quickly. So this is a low. So as you are learning, you'll be labeling them. But when you master, you don't need to label. You can use your eyes to see. Okay.
Right.
Guys, are you following?
Yes.
Yes. Yes.
So as you can see here, I'm just doing the labeling. So as you can see, this is a low, this is a high, this is a higher low because it's higher than this. Then you go to a higher high because it's higher than this. Then you form another low here. So to explain what is change of character, price went up, it broke structure. So once price creates a structure higher than the previous one, which is a higher high, it has broken structure. Forget about the way I'm labeling them. That's a different lecture. You need to learn it differently. It's not part of this lecture. So you can see clearly that when it went up from here, low, high, this is a higher low, it went up, higher high, created a higher low, it created another higher high again. Instead of it coming here and continuing upwards, it came below this higher low. It came below it. So once it has come below it, what I do is that, let me enlarge it. So there is a change of character. Yes, there's a change of character. Price has gone below it.
It's below.
So this, you see, this is your higher low here. This point here. Price has gone below it. Price did not create, instead of after creating this higher high, price did not create a new higher high. It rather came to create a low. So this is a low. Or somebody can even say it's a lower low, depending on how you look at it. Because this low is lower than this low here. Somebody can, if you say a low is correct, if you say a lower low is correct. So how did I enter the cell? I use market structure. So when this happens, it's called change of character. It's called change of character. So right now I know that there's a change of character, and I said it in a lecture that change of character may be the earliest sign that there could be a potential reversal. So I have not taught you supply and demand. So I came to mark my supply. I will teach you that later. I came to mark my supply zone and waited for price to return to my supply zone. When price got to my supply zone, it shows, I mentioned wick when we're doing candlestick pattern. You can see that they are wick, long wicks moving away from the supply zone, meaning that price is ready to do what? Go down. First of all, the confirmation was the fact that the earliest sign was what? The change of character. Price change character. So it was going up. Now my son is buying. He wants to go the entire small. Hello, you only own that I know small, and you like a woman. You like her attitude. All of a sudden, she changed her attitude. That's a change of character. So it's simple English words, okay? And the meaning is just as it says. It's a change of a character. The character initially was, I'm going up. Now the character is, I've come down. So I entered this trade and I wasn't greedy. I targeted this demand here.
No.
I targeted this demand here. That was my target. And I put my stop loss on top here. So you see, I use market structure. Then I now use other POIs like what? Supply and demand. So I use the supply. Please, whoever is there should mute. If the kids cannot be controlled, mute yourself. So I use market structure to give me the earliest signs that this might be reversing. Then to build on the market structure, I use other components or concepts of trading, which is what? Supply and demand, which I have not taught you yet. Then I look at candlestick pattern. Okay. Who can tell me what candlestick pattern is this? We've done candlesticks. What candlestick pattern is this? What candlestick pattern is that?
I think.
Guys, come on.
I think is it evening
doji.
star?
Yes, evening star. So evening star is
Yeah.
correct in a way. Yes, it's correct. Who else sees something else? Reggie said doji is correct.
Yes. I
Who
see a
else
doji.
sees something else?
Sepanjang.
Who sees something else? Nobody want to talk. Okay. So in a way, you can say it's yes, it's an evening star. You can say that. But you see, you may not even know the name of the pattern, but you can see clearly that this bullish candle went up and it showed a wick. So this one even looks like a doji, another doji. Then now you have another candle forming, rejecting with bearish color. I choose red. For red, I choose black. It's personal preference. But you guys can, I think you are beginning, so you use your green and red. It's fine. Then you can see that candle shows going down, going down, going down. I was telling Dr. Say that somebody was saying that price rejected from here because Israel has gone to throw some bomb or something. I was telling Dr. Say, somebody was saying that. I was listening to some guy whilst I was bored. I was bored trading. So I was listening to some guy. Occasionally I listen to people just to get boredom or to see what they are thinking about particular trades. So this is what we call FVG. We'll do FVG. We've not done it. We'll do it. So me and Osei know that price rejected here because it hit the FVG, fair value gap. So because price hit it, it has to react. And later it came all the way down. Inshura, if that is your son, Inshura, mute yourself, please. Thank you. So basically, this is how I entered this trade, utilizing or using market structure. So I'm trying to teach you that even at this basic level, a very, very rudimentary level that of the things you are learning, the things you are learning now are the most important you can build upon. If you know how to identify market structure, identify break of structure. I said break of structure indicates continuation, and change of character signifies a potential reversal in the trend. So simple. So you see this trade, it looks so simple. Simple things. Okay, simple things. And after that, I was trying to buy and price was falling. I think the bearishness is not over. So George, you can close your buy. You can close it. I don't think the market is finished dumping. So close it. Close it and just wait. When opportunity, when me, myself, and Dr. Seth sees an opportunity, we'll share it in the chat. And like I said, this week we are just learning how to trade. I can see on 15 minutes, I can see a demand zone here. I will do this later. I can see a demand zone here. But there are questions to ask on demand zones. It's not just marking the demand zone. There are questions. So the question is, where is the demand zone coming from? It is demand zone coming from an area which reacted to a supply zone. If that is correct, then that is a significant demand zone. So there are questions to ask. So when you see my charts, those are the things I do. You see me labeling things. So there was a supply zone here. Price got there and reacted, and went away. So this demand zone may be what price may be target. There's another demand zone also here. As I said, we'll do those things later. I'm just marking them for my own sake as well. Because at times there's not enough time to do other things. So while doing the live lecture, when I mark my charts, it becomes part of what I use when I want to analyze the chart again. So guys, I have explained the chalk or the change of character question that Engineer Inshura asks. I don't know any of you have any other thing they want me to do before we bring the class to a close. Guys, any question? You see where price is reacting from. It's called a breaker block. But don't worry, we'll do all that later. That's for another class. Any questions so far, guys? If none, we'll bring the class to a close.
No, none.
None. Okay. So you guys, you know what we do every day after every lecture. we just do a little recap among ourselves, see what we have learned today. So basically, let me start with class prepare. Class prepare, what have you learned today? And has it been useful of your time? Useful to be here in terms of your time?
So I picked up something. You said we should always analyze the market structure with the highest time frame, like a day, and then we bring it down to maybe the 4 hours to the 1 hour and the like to see how the trend is like. So that's one thing
Yes.
I picked.
Okay. So now you can identify the trend based on market structure.
Yeah.
Okay. You can identify break of structure and change of character.
Yep.
Okay. Do you remember what I meant by external structures and internal structures?
External structures. No.
External structures are the structures on a higher time frame, like 4 hour up to at least an hour. So let me explain what I meant by that. Let me even reshare again. Just a second. So this recap is what makes me filter what was not clear. So let me go to another good chat. I want another one. Okay, they are all looking the same. Okay, that's fine. Let me remove the indicators. At times I use the indicators as additional confluence to see whether I'm thinking right. But you must analyze your chart without indicators first. Okay, so this is what I meant. When we say, okay, sorry, let me speak English. Forgive me, guys. I know it's not everybody who speaks tree. So you see this structure here. The higher highs, higher lows, or lower lows, lower highs are marked here on a higher time frame. So these are swing structures. So swing structures is another word for external structure. You will see that if I go to a lower time frame, I may identify a new structure like what I did to label here. Let me go back to 15 minutes. You see these things I've done here on 15 minutes. These are internal structures. I say internal structures are structures you identify below an hour. Below 1 hour. Those are internal structures. So 30 minutes and the rest, 45 minutes, they are all internal structures. So these are internal structures. But if you go to 4 hour and you mark a higher high on 4 hour, that's external structure. External structure is swing points. Let me pause. Is it clear or is still not clear?
I think it's clear. It's the same thing, but external is when it is in a higher time frame.
Yes.
And then internal is when it is in a lower time frame, meaning less than an hour.
Yes. Because when I go to 1 hour, all these structures I'm seeing here, you will not see them like this. Oh.
Yeah.
Let me prove to you. Let me go to 4 hour. In fact, let me circle it first. Let me remove this here. Let me circle it to drive home the point I'm making. So I'm going to highlight all these structures here. These structures I've just marked here. Okay, let's go to 1 hour. Look at the way it looks on 1 hour. Look at the way it looks on 2 hour. See, the structures are even getting lost. That's why they are internal structures. You have to go to look. 4 hour, you can't even see them anymore. The same area. So that's the point I'm making, that they are called internal structures because they are on a smaller time frame. And if you see a structure on a higher time frame, like a swing high, it has like greater significance. It is stronger than a structure on a lower time frame. So you use lower time frame or internal structures to look for. That's like when you're looking for entries, you go to 15 minutes and the like. Like this demand zone I've marked here, it's on 15 minutes. It's not on a daily. But when we are doing parameters or parameters that you use to identify high probability zones, you go through about 8 parameters. You don't need to get all the 8, but the more you have, at least once it's 8, you must get at least 4 or more. So the more you have, I think the more likely the zone may be a higher probability zone. Meaning that zone, if you take a trade there, you're more likely to get a desired outcome. Okay?
Mm-hmm.
Okay, so I'm done, guys. Let me just do a recap of your assignments. Do a recap of your assignments so that you don't tell me you've forgotten the assignments. I want to see it displayed on our platform, guys. So these are assignments. I'm repeating for emphasis. You are going to mark, so open any chart at all, and you are going to mark at least 2 break of structure and 2 change of character. And take a snapshot and share with us on the chat. Then you show where possibly, if first of all, you tell us whether it's an uptrend or a downtrend. Then if you want to enter a trade, where can you enter the trade from? And where should you target? I said it that you enter the trade from the pullback and you target the last high. That's for uptrend. Then if it's a lower downtrend, let me go back to that low trend diagram for you. Where is that diagram? Where is that diagram? Here, this one. So you have to demonstrate something like this on your charts. Mark them lower high, lower lows, lower high, and all that. Higher high, higher lows. Mark them. Indicate. So here like this. If I want to take a trade, I'm taking a trade from here, and I'm targeting at least here. Okay. If I'm taking a trade here, I take a trade. So here it's coming down, go up, coming down. So assuming you are taking a trade, you take a trade here, and you target at least the point it broke the structure. So you mark your BOS and all that. Show that on all the charts that you share with us. And if you want to take a snapshot, do you know how to take a snapshot on a trading view?
Yes, I do.
Okay. So basically, last time I showed you, but I'll show you again. You just come here.
Yeah.
You come here, you click on the camera option, take a snapshot. Then you just copy. You can see that I'm going to our platform right now. I'm going to paste what I just did right now. What we did right now, I'm going to paste it. Have I even done? Copy image. Where is WhatsApp? WhatsApp. I close WhatsApp.
Yes.
Since I closed the WhatsApp, the thing has been behaving nicely. So WhatsApp was a problem. Okay.
Could be.
So I just copied and pasted it. So do the assignment and come and share your answers. A very simple assignment. So guys,
All right. All
should we
right.
bring the class to a close?
Yes.
Yeah.
Yes.
George, George. Philip, what have you learned today?
I've learned a lot. I mean, I've come to understand the trends, how to identify a trend, the higher low, lower lows, and then especially this one, the change in character. It's very critical. I just realized that it's very critical in analyzing trends and know when to even enter a trade. Because if that change of character doesn't set in, it means that it's going to go in a one-way direction, and market is not always in a one-way direction.
Yes, you are correct.
There's
That's
ups
nice
and there's downs.
to hear that from you. That's nice.
Yeah.
Reggie, my crypto man, what have you learned today?
change of character.
Okay.
Once you analyze your chart, that is after you have determined and you set up your higher highs and your all your indicators, and then there is an indication that market is having a reversal where the next, let me see, for example, in an uptrend, you're supposed to have the next higher low being higher than the previous higher low. But here's the case that the next one is actually lower than the first previous one. Then you know that there has been a change of character. So that is the first indicator that there's going to be a reversal in the trend of the market.
Okay. Okay. So you learn about breakup structure as well, right?
Yes, please.
Okay. That's nice. Engineer, Ishra, I know these are not new concepts to you. I guess it's all revision, Anamiwa.
Yes.
But was
I
it
have
useful for your
also
time?
a few. Yes. I learned a new thing, internal structure and the external structure.
There's also fractal structure, but I will not bother you with that.
I learned a new thing in addition to what I
Okay.
learned.
Yes, that's good. Okay, guys, thank you very much. I want to thank all of you for joining the class today. I want to join me to thank Dr. Osei, Nana Kwesi Osei for joining us. Guys, thank him for joining
Thank
us.
you. Thank you, Nana. Thank you, Nana, for
Thank
joining
you. Thank
us.
you, Nana. Thank you, Nana.
You're all welcome.
He's a very busy man, but he made time to join us today.
I was busy behind the chat. Sorry.
Nana is very, very good when it comes to fundamentals. He taught me a lot about fundamentals when it comes to forex. So maybe when we get to the lecture for fundamentals, I'll pray he will not be busy. Then maybe I'll let him do that lecture for us. He's very, very good with fundamentals. Very good. In fact, trading platform that I taught you guys, he taught me all that. This man is a very powerful man, but he just quiet there like that. He's just quiet like that. And to make those of you who didn't go to our disco jealous, the two of us are all Santa Clauses. That's just by the way. That's just by the way. So, guys, thank you
Doc,
very much. Yes.
Doc, please let them know very well that we are about 3.
Oh,
Nana
Philip is also a
said,
Santa
Doctor,
Clausian.
yes, please let them know.
Guys, Munsempa. Philip has introduced his Santa Clausian life to you. Oh, guys, but on a more serious note, let's agree on something before we go. I beg you, see, we are all adults. Okay, we all are busy people. We all have things to do. Let's agree to meet on time. Let's agree. We move the time from 4:30 to 5 so that at least it can accommodate everybody. Let's try and come on time. When we come on time, we can do the lecture with even 30 minutes, 40 minutes, we are done. Then we can go. Unless there are more questions or I need to illustrate something further. So I'm holding all of your legs and your knee. I'm holding your knee and your ankle. I beg you, let's all agree to come on time, okay? Let it not be said again that it's time and now either I'm calling people or class private is calling people. Guys, I beg. Can we all agree on this?
Yes. I concur.
Okay. So tomorrow we are meeting our time, God willing.
5 p.m.
Okay. So we'll meet tomorrow at 5 p.m. We may
For
do
sure.
either order blocks or supply and demand. We'll see how it goes. It depends on whether you guys are grasping the concepts. Because I remember the day I taught order block mixed with supply and demand, people were confused. So later we decided to split them. But they are similar, but they're not the same. Order blocks tend to have a little strength compared to demand and supply. That's how order blocks are. And order blocks basically means that an area where institutions are stacking plenty orders. That's what they are called order blocks. So there are plenty orders there by the market makers hedge fund people, the big banks, they are stacking their orders there. So the next time price gets to that zone, there will be an aggressive movement away from that zone. Anyway, I will not get into that lecture today. Thank you very much. Have a blessed evening. As soon as the
Thank
video
you
becomes
and good
available, I'll
night.
share it. Guys, please keep watching the videos and practicing. Good night. Bye-bye.
Good night. Good night. Good night, everybody.
Good night. Bye.
That's all of us.